This graph shows us the performance of the Trian fund versus the average hedge fund portfolio and the S&P 500 index. As you can see, the average hedge fund portfolio has clearly underperformed the S&P 500 in the past 10 years. When looking at the Trian fund, however, it has clearly outperformed the S&P 500 over the long term. One thing that we can see in the chart is that the Trian fund has higher volatility, and this is primarily due to activism. Activism is sort of an investing strategy where you build up a lot of influence in a company by buying a lot of shares and either get a seat in the board of directors, or you can exert influence by talking to the management individually. Once you do this, you then propose some strategic initiatives such as restructuring or any M&A activity you see fruitful. Additionally, their manager is regarded as a top 5 hedge fund manager. Some of their previous activist involvements involve Wendy in 2008, where they actually proposed a merger with Triarch. Then in 2012, they actually got a seat in the board of directors for Kraft, which is nowadays Kraft Heinz, and they managed to separate Kraft and Mondelez, which has actually boosted shareholder returns by a lot since 2012. Then they also got a seat in the board of directors at BNY Mellon, which allowed them to improve the efficiency of the company. And in 2017, they didn't actually manage to get a seat in the board of directors, but management actually decided to follow the strategy that they proposed, and they managed to improve performance and boost again shareholder returns. Now, their current objective is Disney, which, as you can see on the chart, its PE ratio is basically at the lowest this has been in the past 4 years, which is at the lows of the pandemic. This is a troubled company, as the Triumph Fund believes that the company has no clear vision for the future, and, quote, Disney has a lot of hidden potential which is not currently being exploited. So the man behind this activist investment is none other than Nelson Peltz, the activist investor who right now is at war with Disney. Trian Fund currently has $8.5 billion assets under management, and Nelson Peltz has a net worth of over $2 billion by being an activist investor. He's a billionaire investor and of course the co-founder of Trian Fund. He is widely regarded as being one of the most successful activist investors in history, and this is because he has the ability to drive changes within companies to enhance shareholder value. His philosophy can be divided into 5 different pillars, with the central one being undervaluation. He always looks at companies which are extremely undervalued in relation to their intrinsic worth. He does this by doing a financial analysis, and for example, regarding Disney, he believes that only the parks and attractions segment for Disney would be valued at around $80 per share. Since Disney, right now, it's at around $90 per share, that means that the rest of Disney, the movies, the characters, the licensing, the video games, and all the rest, is worth up to $10 per share. So he believes that this is clearly not right, that it is undervalued, and he wants to get a seat in the board of directors or have enough ownership to be able to exert some influence on the company and impose his strategic initiatives. Since last year, he's actually managed to force Disney to go into a cost-cutting and restructuring strategy, and it has been working out really well since company's share price has stopped falling, and it has even risen a little bit since that decision. But he wants more. Now, he also focuses on efficiency. He loves to get into a company in order to streamline the operations and enhance the overall efficiency for the company. Streamlining operations means being able to reduce costs or cut the costs to the minimum they can be without hurting the efficiency and the productivity of the company. So he wants to minimize the cost per unit for these companies, which is honestly the thing that will boost shareholder value for the long term. He also focuses on strategy, specifically M&A strategy. He is a genius at recommending mergers, acquisitions, or divestitures. As you can see in the previous examples with the Kraft one, he actually recommended a divestiture, and he led the divestiture between Kraft and Mondelez. He separated them into 2 different companies which have outperformed the S&P 500 since that decision was taken. He then focuses on return on investment, which is all about boosting the return for shareholders. He does this by either doing share buybacks, by relaunching or increasing the dividend payouts, and also by funneling the capital appreciation so that shareholders can sell at a higher price than the way they bought it at. And finally, he focuses on trends before doing any investments. So he considers broader industry trends and market dynamics. For example, right now he's going at Disney because It is one of the most recognizable companies in the US, and they are currently taking part of the streaming trend, which can return a lot of value for Disney shareholders. His points to consider, we can divide them into 6 different ones. He first likes to conduct a lot of research into the different financials of the companies, into the market dynamics, and looking at the different industry trends, who are the main players, the competitors, the regulations, and all that. He loves to take an active role because he believes he knows the way to actually boost shareholder value for the different companies he's taking part of, and so far it's worked wonderfully for him. He seeks a seat on the board of directors to influence decision making, and as we have seen from his past track record, he is widely successful at this. He then likes to take a point of restructuring to make the company more efficient. He undertakes cost-cutting measures, portfolio optimization, and even divestitures to ensure that the company will return as much value as possible to the different stakeholders. And if he wants to go even further, he will then propose some M&A activity strategies. For example, he likes to propose different mergers to create synergies with similar companies in the industry, or even just to streamline operations. Number 5, he loves to focus on shareholders. It is his main strategy and his main point when doing any of these activist investments. He ensures that investors see a positive return on their investment. As we have said before, this can be through dividends and through share buybacks to ensure that there is capital appreciation. And finally, his strategy is to create long-term value. He likes to get into a company, position it for sustainable growth to enhance higher shareholder value over time. So he's not those type of investors who likes to get into a company, create as much short-term value as they can, get out quickly, and then the company will be left a mess. He likes to get into a company, steer it into the right direction, and then let it rise alone for the next 10 years when he has actually made that strategy and created a vision for the company. Some important information that Nelson Peltz believes is essential for effective investment is, first of all, look for an undervalued opportunity. This can be either, for example, the analysis that he has conducted in Disney, valuing the different segments of the company, seeing then why the company is valued at a lower price than what it should be valued at, and then deciding whether this can be an opportunity or not. The second one, which works for him because he has a large sum of capital, is activist investment. This, as we have discussed, is key because since he has very clear ideas for the companies, when he gets enough ownership to influence the decision making of a company, he usually tends to do well and enhance shareholder value. And finally, long-term vision. As every single one of the super investors has said, value is created in the long term. You should buy stocks as if the stock market were to close tomorrow and you would not be able to get your money out from that stock in the next 10 years. So thank you for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content, and there is a link in bio for a free stock if you join Trade Republic and Trading 212.